Good day, everyone. Welcome to Global Government News. Today is Friday, November 5th, 2010, and I'm Darko. Welcome to this economic news video, and I'd like to start off by plugging my own website, www.ggnonline.com. That's ggnonline.com. I post all of my most recent videos, and there's some personal information. You can learn more about me and what I'm doing. I've just been starting off with these little introductions for mostly new viewers, so sorry to those that watch my or view my videos on a normal basis. I'll just get to the point here. I just like to do news commentary, and I post links in the video's description. So I basically read headlines, give you my comment on what I think. The mainstream media is kind of slanting the story, how they want you to think, and try to give you, I guess, I don't know, kind of a bigger picture on it. But either way, please visit my website and check out my YouTube page, and we'll get started here in the economic news. The first article up is from Reuters, and it's titled Gold Rises to Record on Renewed Inflation Worries. Gold prices rose to an all-time high within a few dollars of $1,400 an ounce on Friday as the U.S. Federal Reserve's program to resume buying government bonds stoked inflation worries. It says the metal was up nearly 3% for the week, its strongest week close since May, Reuters data showed. And we're going to move on here, and the next one up is crude oil advances to two-year high as jobs increase more than forecast. It says crude oil surged to its highest level in 2 years as U.S. payrolls rose more than forecast in October, a sign that the economy is recovering. Oh, you like that, guys? See, the economy is recovering. And the dollar is headed for a weekly decline against most major currencies. Oil capped its best week since February as payrolls gained and the jobless rate held at 9.6%, which is not the real rate. It's probably more about 15 to 20%. It says the dollar index, which tracks the currency against six others, was poised to drop at 0.9% this week, the most in 4 weeks after the Federal Reserve announced $600 billion in stimulus measures. I hate that word, stimulus. You know, it's such a misleading word to the hoopleheads. What is it going to stimulate? Well, it's going to stimulate maybe corporate profits. It's going to help stocks, but it's not going to help the average person out there. So it says here, the Wall Street Journal, consumer credit increases. Americans boosted borrowing for the first time in 8 months in September, the Federal Reserve said Friday, but credit card debt continues to decline. Consumer credit outstanding grew a seasonally adjusted 1.1% in September, or $2.1 billion to $2.4 trillion, according to the latest report from the Fed. It goes on and says the increase follows a revised $4.9 billion fall in consumer credit in August. The Fed had initially estimated consumer credit slipped $3.3 billion in August. The September figure beat Wall Street's predictions, which suggested a $3 billion decrease in consumer credit for the month. So everything's getting better, guys. National rents to further increase. This is from a website out of Australia. Just had to make that disclaimer. It's from Australia. Renting is expected to become even more expensive due to a boost in population and a shortfall of new homes being built for people caught up in the rental cycle. It says the process of securing a property at a reasonable price is likely to become trickier over the next year, a series of recent rental surveys show. Goes on and says, according to the minutes of the latest latest Reserve Bank of Australia, same thing, I guess, all right. Private central banks, according October Monetary Policy Board meeting indicated there were signs that the rental market was tightening again, with vacancy rates falling from levels that were already quite low. U.S. home ownership at its lowest rate. And I just like to throw this out there while I'm reading the headlines, throw my little comment. As far as property rates go, the elites and the big globalist bankers don't want the slaves or peasants or citizens or subjects or plebs, whatever term you prefer. They do not want them to own property. And it's a very short time period that people here in the U.S. were allowed to own property. We were basically used as tax slaves, and we were going to build up this big global world government, and then when they were done with us, they were just going to leave us out to dry. So as far as owning cars, and all that, personal transportation, they prefer public transportation and they'll sell it as being green. But in reality, they want you to rent and they want you to ride public transportation. And, part of it is because they want to be able to track you wherever you go. They don't like slaves moving freely with privacy. So they want you to be very predictable. But home ownership and owning property, and property rights is something that is not included in the future for us. It says new records show the U.S. homeownership during the third quarter has remained steadily unchanged, continuing to languish at its lowest level in almost 11 years. It says, according to the latest figures published by the United States Census Bureau, a leading source of data about America's people and economy, the number of Americans living in homes they own has shrunk to 66.9%, the lowest level since 1999. Says the report further dampens Americans' dream of homeownership as figures indicate the homeowner vacancy rate, or the share of properties vacant and for sale, in the third quarter has remained unchanged at 2.5%. It says third quarter homeownership rates were the highest in the Midwest at 71%, while the West region had the lowest at 61%, according to the Census Bureau. And it's like George Carlin said, the American dream, you have to be asleep to believe it. Actually, I'm not sure if it's George Carlin or David Icke, but it was one of those individuals. Either way, it's a good quote, because you do have to be asleep to believe in that crap. Because by that I mean you're born into this debt-based monetary system, and so you're going to constantly have to pay off debt with interest on money that you really didn't have much a say in. You didn't have much of a say in, right, and how it got spent, and you didn't consent to it. And Social Security, people think, that's some big, happy, lovey-dovey pot that you put money in. It's like, no, that money is borrowed, and then it's given to what the powers that be referred to as useless eaters, those that are no longer, producing and working and paying taxes. So they want you to be, basically the rabbit chasing the carrot from the moment you're born to the moment you die. Keep those blinders on. Keep moving forward. Pay your, your Medicaid, Medicare tax, Social Security tax, your property tax, your income tax, and all the other taxes. Gas tax, whatever. And like I said, don't look back. And then when you get cancer or diabetes or you're obese or any other form of eugenics hits you by the time you're about to retire, then just remember, there's certain people that wanted that to be. So I know it's a sad, sad world. And as long as the slaves keep going to the polls and voting in the next slave master, you're just going to keep perpetuating this whole paradigm or system. It's just gonna get worse. So, anyways, moving back here, it says hiring spurt in October eases jobs crisis a bit. Jobs crisis eases with spurt of private hiring, but not enough to reduce unemployment. And it says a jobs crisis eased a bit in October as companies stepped up hiring, suggesting further gains ahead. Still, hiring remains far too weak to drive down unemployment, now stuck at 9.6%. And it says the newly elected Congress will come under pressure to take action to accelerate job growth. And so that's why I said you're just going to perpetuate by electing new crapheads in. You're going to get the same thing. You can choose the lesser of two evils, but in the end, you're going to get evil. And I'm not being religious or anything like that. I'm just saying that you're going to get people that are going to be deceptive, people that are going to lie, and they're put in positions that are essentially made to be corrupted. Right? They're in there and they stay there because there's a few people that usually slide through the cracks. Usually younger congressmen or people like Kucinich or Ron Paul, but and third party representatives. But for the most part, they're bought out, and most of the heads of state and all that, they're all bought out, and that's why they're there, and that's why they get reelected. Much like Daley in Chicago, they step down, and but they don't get elected out because they're doing what the bankers and what the corporations want them to do. So let's move on here. But as far as the whole hiring thing goes, they look at it and say, oh, they lost the. They didn't lose as many jobs as they thought they were. Ooh, that's a great unemployment statistic and number. We better put that out as an increase in unemployment. And it says here in Bloomberg, initial jobless claims in the U.S. Climb more than forecasts. And this is from November 4th. More Americans than forecast filed applications for unemployment benefits last week, showing the labor market will take time to improve. So there's all this double think going on. And that's why I do these videos, just because, it's a documentation of all the rhetoric and double think that goes on. And, most people don't have the time to sit here and make videos like this or even read all this news. I mean, with whatever time that they're left with, to just really keep track of all of it, right? Because it'll make your head spin, and that's what it is, information overload. So the jobless claims rose by 20,000 to 450,000 in the week ended October 30th from a revised 437 the prior week. The Labor Department figures show today in Washington. The total number of people receiving unemployment insurance fell, while those on extended payments increased. And, I just wonder, when they say this, people receiving unemployment insurance fell, well, what does that mean? Are those the people that are no longer eligible, that got cut off, So there's ways that they can fudge these numbers, and that's the biggest way, that's the biggest tactic or strategy to kind of mask the unemployment rate, the real unemployment rate, which is those that are no longer collecting and can't. And then they say, ooh, that's a bump. That's unemployment lowered. So you just have to watch that, I guess. I know there's a lot of people that are listening to this that are aware of it, but just for new viewers or people that are new to this type of information, this is from Reuters. September pending home sales fall 1.8%. Pending sales of previously owned U.S. homes fell unexpectedly in September. A report showed on Friday, and activity may remain volatile for months as troubles with foreclosures disrupt the market. Says the National Association of Realtors says its pending home sales index based on contracts signed in September fell 1.8% to 80.9 from an upwardly revised 82% in August. Economists polled by Reuters had expected a 3% rise. The data reflects home sales contracts, not closings, and is seen as the leading indicator of housing market trends. Next one up is Fed's Honig, rates must go up, says Federal Reserve Bank of Kansas City President Thomas Honig will speak before real estate agents Friday as the housing market struggles to recover. His message, interest rates need to go up. He gave the Wall Street Journal a preview. And in my limited knowledge of the economy and the market and just the financial system, is that the Fed likes to keep interest rates low, artificially low, right? It's not dictated by the market, a free market. It's dictated by, the dictatorship, the Federal Reserve System. And so, they just keep the interest rates low, and what does that do? It keeps possible investors and those in the market, it gives them this kind of illusion or perception that there's a lot of borrowing going on. And this is what they keep doing, and this is another tactic to mask certain measures that should be taken, such as this the president of the Kansas City branch is saying. So just want to throw that out there. This next one up is a Fannie Freddie overhaul could cost $685 billion. So after the big stink about the bailout and the stimulus, this is a whole nother stimulus in it of itself. And then, of course, you got $600 billion from the Federal Reserve that just got printed. So, I mean, this is a propping up of the market. I used to think that there was going to be this imminent collapse, but I don't think that's going to happen. I think it's just going to be a milking of the system and people's standards of living just dropping steadily. And they're going to do it slow, like the frog in boiling water. They're going to throw you in there. They're just warming the water up. They're not going to throw you in scalding hot water because they know you'll freak out. You might, revolt. They just want to do it so you're nice and passive and you accept it all. But I said the total rescue and overhaul. Mortgage giants Fannie Mae and Freddie Mac could reach $685 billion, according to estimates published by Thursday's Standard & Poor. I'm out of time here, so guys, please go check out the links. Fed cash injection raises global concern. Germany, China, Brazil, and South Africa have criticized the U.S. Federal Reserve for its plan to pump $600 billion into the economy. And here's 9 reasons why quantitative easing is bad for the economy. Please go check this out. Great website, got good information. U.S. dollar printing is a huge risk, China central bank advisor said. And a CO2 bank tax is recommended by George Soros. Thank you.